Today is Wednesday, April the 8th, and does it seem like the bull market is back? Is everything in the clear? Yesterday we recorded our highest number of deaths. Italy's coronavirus deaths have picked up again. UK says they're going to be on lockdown through the end of May. The market is anticipating that this is going to go away. Volume was low, however. Initial drop in the morning down to the previous close, and then once we hit that, we were up and away, and it was just green all day long. Advancers to decliners 83 to 41. That takes the stock market breadth indicator back above, further above the overbought line, and it looks something like this. When I plotted in Excel and looking back at 2018, we had all of these days here that were over 300. 1, 2, 3, 4, 5, 6 out of 9 days over 300. And that signified the beginning of the rebound. And now we have had 1, 2. So let's see if we can keep up this strength above the 300, but certainly the bulls were definitely in charge. And you'd think that money was flowing into the market. Well, it is on a moving average basis, but on a volume basis, lots of buying, but very little selling. That's a pretty telling sign there. We've had less selling today than we did on Monday and far less than we did on Tuesday. I mean, the last time we saw this was back here, which was in late March, but that didn't mean it was over. I mean, we still had continued selling, and you can see that the market can play tricks on us. Are we out of the woods yet? Certainly you should not change your strategy. If you've been buying on the way down, great. If you want to buy here, that's okay too. The SPX was up 3.4% today, resuming the stretch towards this Gartley/bat pattern, B-A-T pattern, maybe because it's shaped like a bat. The VIX was down a little bit, bounced off the 50, closed exactly on the 50. So keep an eye on the volatility. It's coming up to the cloud. Apple, huge day, 2.4%, not as big as the market, but nonetheless heading up now to complete its bat, and 50% retrace of X and A, which is where it saw resistance last time, could be in the cards tomorrow. I still have all of my short positions for September, the 300s and the 310s. The 310s still have $2,600 of premium. I almost got rid of them today, but why would I do that? The only way I would lose that $2,600 and the other premium that's still hanging out there ready to be collected of those, and that's a total of, let's see, on those 310 calls, I've got $2,600 already collected in premium, but $2,300 still sitting there waiting to be collected. So I'm going to continue to hold on to these, because the only way I lose that $5,000 is if the stock goes to 326 by the end of September. That's a long way to go. That's a whole, how many dollars? I mean, that's just a long way to go. So I'm holding on to the short calls because there's still more to be gained. The Real Estate Investment Trust, AGNC, up 11% today. And the preferred shares, which have a face value of $25, can still be purchased for about a 10% premium. But can you believe these were selling for $9 and $11 respectively just a week and a half ago? Caterpillar 127, big mover, popped above this trend line here. So now we're heading up to the 200. If we move above these 200s, my God, it's just clear sailing. That's one stock where I took 120 short calls. I didn't expect it to take off like this, so that might be an opportunity lost. Nonetheless, I was planning to recover my money and make money on the premium, That was my premise, and it looks like that's what's going to happen. Home Depot only up $2 today. That's pretty disappointing. It's still going to complete, or still in target to go to 213.16 for the first leg of this bat pattern. But that was a little disappointing for Home Depot to be only up 1% when the market was up 3.4%. Maybe it's just had too much of a good run and people are starting to diversify. Disney was up 7.5% today. Boy, it sure doesn't show that, does it? But it is. It must be after hours. Something must have jumped after hours. Let's see if I go into extended data. There we go. So the move was after hours. Lots of people buying into Disney. They must have reported something. Although it's not earnings, they might have given some indication on what their earnings outlook might be. AT&T was down a slight bit, and this is the type of candle you see typically on a reverse. This is a hammer, and you would expect downside to come now. Has it gone ex-dividend? Today might have been the ex-dividend day. I have a feeling that today was the ex-dividend day. Ex-dividend was on April the 8th. There you go today. That's why it vested a 52-cent dividend, which would be payable, I think, on the 15th. So it was down 19 cents, which is just a short amount, a lot less than the dividend is paying out, 52 cents. Whirlpool hit the magic 100. That's been a good stock. It was down at 64, so it was an opportunity to buy, and I hope some of you did. Where are we? The oscillator would tell us that perhaps we've got a little bit of selling to go on tomorrow, a little bit of taking the cream off the crop. Joe Biden is the Democratic candidate now. That takes the socialism fear out of the marketplace. I do believe that Wall Street will support Biden. They would not have supported the socialist policies of Bernie Sanders. So that's another reason the market might have popped up today, was a little bit of anti-Bernie sentiment pumping into the market. Anything else to talk about? Andy says, keep an eye on FSLY, and it was rejected today at the 200, just like it was the day before, but it's got very little resistance up ahead. It could be going places. It's certainly on its slower stochastic, it's still moving upwards, and it can still run in the overbought on the 14-day, the 12-day, but on the 40-day stochastic momentum indicator, it's still got room to run. So Andy, if you were buying down around $11, you first wanted us to look at it right up here, and it's right back at that point. So if you had confidence in the stock and you were buying it on the way down, I mean, you're killing it today. That's it for today. Let's keep it at 8 minutes. See you tomorrow. Keep an eye on oil and the dollar. Here's that's not very good. That's not good. That's not what I wanted. I wanted to show the S&P against the dollar and oil and gold. So there is the dollar starting to drop, gold starting to drop. The S&P isn't plotted here. And TNX is a bond fund, so bonds are starting to move up. So we know the S&P was up, but the dollar is down, gold is down, and oil is not here. I've got to add oil back into this. That's all for today. Thank you.